Hello, I'm David Frazier, aka the Market Monk. We're recording today's Market Monk show on Friday, April the 11th at around 6:45 in the evening. Well, we got another sell-off in U.S. stocks again today, and I'm actually surprised. I thought that stocks were going to stabilize at least by today, and but that did not happen. So where do we go from here? What do I see happening from here? I mean, I was definitely wrong this week. I thought we would see stabilization in the major market indices and stock prices in general in the United States, but we did not. However, I find it interesting and very, very significant that stock prices, or at least the major market indices for the world's major emerging markets, being China, India, and Brazil, were either flat or up this week. The Shanghai Composite Index was up for the week. India's major stock market index, the Sensex index, was up for the week, and Brazil's Bovespa index was essentially flat. And I didn't look at it extremely closely. It looked like it was down just a little bit. I didn't do the number crunching. I looked at some charts, but it was essentially flat. In contrast, the major stock market indices for the developed countries, i.e. the United States, Europe, and Japan, were all down this week. That's a little confusing. I guess maybe not terribly. I think probably what's going on here is that investors and stock market speculators have apparently been rolling out of numerous U.S. stocks, which many of those stocks were overpriced based on their 3 to 5 year earnings projections, and rolling that money into stocks of emerging market companies that sold off quite a bit last year. So I think that's more than likely what's going on. Speculators and investors are just rolling out of some U.S. stocks and moving into these oversold emerging market stocks. Now, does that mean that the U.S. stocks are going to continue to sell off? I think there's a good chance that story stocks, which I discussed yesterday, will continue to sell off because of my review of about 25 of those story stocks. They seem to me to still be overpriced. That is, they're priced at PE multiples that are substantially higher than the estimated earnings growth rate for their underlying companies over the next 3 to 5 years. And until those prices come down to some more, to be at valuations that make sense based on their likely future earnings growth, stock market speculators, investors are probably going to continue to roll out of them. Now, on a more positive note, though, for the United States, larger cap stocks, even though they've come down too, obviously, which is exemplified by the pullback in the S&P 500 index, the Dow Jones Industrials, in addition to the NASDAQ Composite and the Russell 2000, they're holding, at least they held today, at some key price support levels and price momentum indicators for those larger cap stocks indicate that they're really substantially oversold here. So what I'm saying is that it looks like to me that stock prices in the aggregate are probably going to now hold up and stay at about where they are for maybe another week or two, whereas a lot of these story stocks are probably going to continue to sell off. So therefore, I'm advising subscribers to our newsletters here at the Market Monk to continue to hold all of my previously recommended securities positions. I don't recommend these overpriced story stocks. So we're really not getting hurt here to any substantial degree. As I stated yesterday, my short-term trading recommendations, which even though they're not story stocks, they're stocks of companies that, in my opinion, are now actually quite oversold and being underpriced by stock market participants. We're still getting hurt in those stocks because these small cap stocks and technology stocks, they all tend to move in tandem to some degree, and with story stocks continuing to sell off, well, they are even these strong companies that are priced at sensible valuations, in my opinion, based on my research, they're coming down with these story stocks. So we might have another week or two before they rebound. As far as the latest economic reports, we got a very positive report today from the University of Michigan's business cycles forecasting department, or their economic cycle department, their econ department in general, that showed that U.S. households' expectations regarding the future direction of the economy improved substantially over the past few weeks. And that's actually a very significant leading economic indicator, a pretty reliable one. So, I think all we're seeing is a very justified sell-off in stocks of companies such as Tesla Motors, Twitter, Netflix, Athena Health, Facebook. Even though Facebook isn't really quite as bad, we're just seeing a sell-off in those stocks that were being substantially overpriced by market participants in terms of their estimated future earnings growth. So that's it. I'm going to leave it at that for today. As always, I'll do a lot of research this weekend, and I expect to have a lot more to talk about this coming Monday. So thank you for listening. I'll speak with you again this coming Monday.